podcast, which is going to be looking at one of the most important topical issues of the day, the relationship between the UK and fellow members of the European Union. Here's a little bit of background in terms of membership, current number of countries inside the EU. It's always good to show the examiner a little bit of awareness. As we stand in May of 2015, there are currently 28 nations inside the European Union single market. The UK joined in 1973, and some of us are old enough to remember the evening when that happened. The latest member to join, a very interesting economy, was Croatia, which joined in the summer of 2013. And this table is quite useful because it gives us a feel for quite a few of the newer members of the European Union, particularly the enlargement of 2004, when 10 new countries joined to take the EU from 15 to 25. Biggest of those was Poland. Then in 2007, Romania and Bulgaria joined the European Union to take the total to 27. And as I've just mentioned, Croatia came in 2013. So 28 countries have joined the single European market. Of that, 19 have joined the single European currency. Of course, the UK is outside of the euro, and there's a debate at the moment, which is an important one for you to revise, about whether the UK is better off inside or outside of the European Union as a whole. This chart shows what has happened to per capita incomes for the 12 nations that joined the EU post-2004, and also adding in Croatia, came in a couple of years ago. Have a look at the data, and in particular look at the purple line right at the top. That is the average per capita GNI adjusted for purchasing power parity for the European Union as a whole. And in 2018, the average income is likely to be nudging towards $40,000 per head. Now, what's interesting and important here is that all of the new nations that have come into the European Union have a per capita income which is lower than the average. So we've seen an enlargement of Europe to encompass essentially relatively poorer countries. But most of them have made quite significant gains in their average living standards, albeit in the case of Bulgaria and Romania from a very low base. This is the process known as income convergence, and it's one of the factors that the UK uses when supporting enlargement of the EU, as opposed to an ever deeper economic integration between member countries. Some interesting data on this next table. What I've done here is I've taken GDP per head, PPP adjusted, purchasing power parity adjusted, for each of the European countries. The average for the European Union, the 28 countries, I've given an index number of 100. And you can see what's happened to per capita incomes over the period from 2003 through to the end of 2013. I've highlighted a couple of countries in different colours for you. If you look down the first column, look how sharply per capita incomes in Greece have fallen relative to the EU average, from 93% to just 73%. On the other side, Poland has made substantial progress from having a PPP adjusted GDP of less than half the EU average in 2003. It was up to 2/3 by 2013. It's not possible to envisage a situation where per capita incomes in Poland could overtake Greece in the near future if present trends continue. 10 years ago, the UK had a per capita income about 20% higher than the European Union average. That figure has come down, if you look at the bottom of this slide, to just about 10% higher than the average in the last 2 years. But we are one of the richer countries inside the EU, but actually other countries are doing substantially better. Sweden is at 127, for example. The Netherlands at 131. So this is an interesting guide to what's been happening to relative living standards over the last 10 years. Now, the debate about whether the UK is better off in or out is one which is clouded by the misuse of statistics. You basically pick and choose some data to prove or support your own point. And if you get a data response question in the exam on this, please be very careful to note the source of the data and in particular the source of the extracts used, because value judgments are almost impossible to avoid in this debate. One of the issues is how much does the UK pay into the European Union to fund European projects. Well, the evidence is pretty clear. Our net contribution is about £9 billion per year, about £9 billion. Why is that a net contribution? Well, we pay more than that in. We pay around 13 billion in per year, but we get some back. We get some back in the form of some farm subsidies, some regional assistance for some of our deprived areas, and other forms of regional money. In net terms, Britain is paying about £9 billion per year into the EU. Now, for some anti-EU people, that's a significant cost. For others, it's a small price to pay for membership of a single market with over 500 million consumers. In terms of trade and investment, these are two really key parts of the debate. There's no question that Europe is the UK's major trading partner. Although one has to make an allowance for the amount of trade which goes through the port of Rotterdam, which actually amplifies the figures, if one steps back and looks at the total, about 45% of our trade is with fellow members of the EU. That's actually come down a little bit in the last 5 or 6 years. It was closer to 50%, but obviously our trade with emerging countries has risen, and you can only add up to 100% in terms of total share of trade. But Europe's our biggest trading partner. Europe is also the biggest source of inward investment coming into the UK, so-called FDI. Just under half of the total stock of FDI in the UK, which is something like £450 billion worth, has come from other EU countries. So that's quite an important argument. We sell around £4 billion worth of exports per week to our fellow EU countries. That's goods and services. But actually we import more. In fact, last year we had a record trade deficit of £62 billion with the EU. And there was a trade deficit in excess of £1 billion per week. This is a wonderful chart from the work of Cesar Hidalgo and the Index of Economic Complexity. It's a patchwork quilt showing where the UK's exports of merchandise goods go to. And it's quite important because the purple area, the European Union, is more than 50%, approximately 52-53% of our goods exports. United States has about 12% of trade, then Germany 11%, and then countries such as China and Russia are well down in terms of percentage. Indeed, if you add up all of the exports from the UK that go to countries classified by the IMF as emerging economies, many of whom are fast-growing countries, it's only 11%. And part of the debate about the EU is whether Britain needs to recalibrate, relaunch its trade policies with a greater focus on emerging economies. Are we best off doing that inside the European Union, for example, with pan-European trade agreements with South Korea and China, or are we better off stepping outside the EU and trying to negotiate trade and investment deals with individual countries on our own? That's a kind of fundamental economic point which you need to consider in your revision. When you're talking about Europe, when you're thinking about the issues, you can't avoid the migration issue. The figures come out each year. There's obviously a debate about the accuracy of the numbers and whether we can measure migrant flows precisely. Clearly we can't, but the overall view is that net migration into the UK has been increasing in recent times. It was over 600,000 migrants coming in the year to September 2014, about 320,000 people leaving, giving a net inward migration of just under 300,000 people. If you take the migrants from the European Union, because of course part of the EU is we have free movement of people. It's part of one of the foundations of the single market. In 2014, net migration from other EU countries was a shade over 3,000 people per week. 178,000, of which 46,000 citizens came into the UK from two of the poorer European countries, Romania and Bulgaria. It was difficult a year or so ago to avoid rather garish and exaggerated newspaper headlines about the likely scale of inward migration from countries such as Bulgaria and Romania. In fact, the evidence is really quite clear. The total stock or number of Bulgarians and Romanians actually working in the UK was already close to 100,000 in 2012, and it has risen. It's over 100,000 now, but it's actually fairly stable at between 120 and 130,000 people. Most of the new jobs created in the British economy over the last 12 months have been taken up by UK nationals. ONS said that last year over 550,000 UK nationals found new work. Just under 200,000 jobs went to non-UK nationals. So I think that it's important to couch the debate using the official data, not stuff that's made up by pressure groups. This isn't really a time to give you a full revision webinar on the economics of migration, but this is one of my favourite slides on the whole issue, because I think the fundamental point is that migration has dynamic effects which take oftentimes several years to really show through. Migration affects the labour market, it affects government finances, both tax and spend. It clearly affects the level of consumption on things like housing and education and consumer goods. And fundamentally, at the bottom right-hand side of this slide is the debate between economists and between policymakers about whether migration is a positive dynamic for a country's competitiveness, particularly if we encourage into the country talented, skilled people in jobs that where we need extra workers. So I'm not going to go through the migrant debate in this revision webinar, because I think there's some other issues to cover. It may be something you want to research in a little bit more detail yourself. So I just want to focus finally on this debate over Brexit. Now, Brexit is the media term for British exit from the European Union. Don't forget, we're not part of the single currency, and there's no prospect of the UK joining, certainly in this Parliament and probably the next. That debate's already over. But there is an intense debate ahead of the referendum, 2016 or 2017, about Britain's position and continued membership of the European Union as a single market. And this whole debate is often characterised by the media as the Brexit debate. There are many, many different aspects of the membership of the European Union which you can bring in. This is going to be a topic where you're going to be using concepts such as comparative advantage, trade creation, trade diversion, the economics of customs unions. All kinds of macroeconomics will come into your discussions. So, for example, is Britain better off staying inside the EU to take advantage of the rising level of intra-EU trade between countries that are already part of the single market? Ultimately, is membership of the EU good for investment and fundamentally for jobs? We've touched already on the migration debate. If we leave the EU, will we impose tougher controls on labour migration? If we leave the EU, will Britain be free of what many people think are burdensome and costly EU rules and regulations? Or actually, do they serve a deeper positive purpose, and we benefit from those? Europe has a whole raft of environmental policies ranging from carbon trading to tough emissions regulations on cars. Britain signed up to those and actually gone further in many ways. Where will the debate go if Britain leaves the EU? And fundamentally, what will happen to our living standards over time if we stay inside the EU compared to coming out? I've shown you a table showing that our relative living standards have fallen in the last 10 years, but can we turn that around? And what is the system and the policies that are best suited to doing that? So these are really big debates. I think when you're revising the European Union, it's important to stick to the economics as much as you can, but you can't avoid making value judgments effectively at each stage of the analysis. And the point I want you to take from this little section of the webinar is that so many of the arguments are quite finely balanced, and many of the costs and the benefits involve a degree of subjectivity, and many of them are actually quite intangible. The lifestyles that we lead, our freedom to move between countries, the rights to welfare provision and healthcare, etc. Many of these aspects are fundamentally intangible and not something that you can measure in a spreadsheet. There have been numerous reports on whether the UK will be better off inside or out. So many that I can't cover all of them. And you might argue at the end of this that I'm picking 3 that have been broadly supportive of the EU. But in fact, I've picked 3 from fairly independent, well-established and highly regarded think tanks and academic organisations. So the Open Europe report is the most recent substantive research on the Brexit debate. They don't come to a very, very clear view. They say that if we left the European Union in 2017, by 2030 we could be talking about a permanent loss of GDP of just under 1%, or a permanent gain from leaving. They say that the economic impact is not clear cut, and that's a nice evaluative phrase to use. They mention the Norwegian and the Swiss models of association. I'll touch on those in my next slide. They say they think it's not suitable for the UK post-Brexit. One of the research reports which I liked in particular, I have a very strong regard for the Economist, and their Centre for Economic Performance last summer came out with a report saying that actually the leaving the EU will be actually quite costly for the UK and would involve several risks. And their argument was that the negative effect on growth of less trade and investment from leaving would be greater than the benefit of having to pay less into the EU budget. But notice there the evaluation argument they used. Much depends upon. That is always a terrific evaluation phrase to use in many different essays. And in this case, they argued that much depended on the scale of the non-tariff barriers if the UK leaves the EU, the extent to which we will be able to trade freely with European countries if we become independent. My final research recommendation came a year before, so you've got 3 reports from 3 different years here, from the employers' organisation, the Confederation of British Industry. It's often said that smaller businesses tend to be a little bit more Eurosceptic and bigger enterprises tend to be more Euro-supportive. And maybe there's a little bit of that in the CBI report from 2013. They argued that membership of the EU brought a benefit to the UK, a net benefit over costs of about 5%. But again, the evaluation phrasing here is quite interesting from an essay exam point of view. Their argument is that Britain does not face an either-or choice. In other words, fundamentally, although the referendum will decide that for us next year or the year afterwards, actually what really matters for Britain is not that decision. It's becoming more competitive and building more links and networks in trade and investment across the world anyway, regardless of our membership of the EU. And that's almost a kind of conclusion you could come to as a final reasoned comment at the end of a long essay. One of the arguments for leaving, I'm drawing here on the arguments put forward by politicians from UKIP and Eurosceptic economists, and there are some out there. So essentially 3 main groups of arguments. First of all, if we left the European Union, it would give Britain the opportunity to renegotiate trade and investment relationships, both with European countries and crucially with fast-growing emerging countries. Remember, Britain only does 11% of trade with emerging countries as defined by the IMF. The supporters of exit argue that small businesses and consumers would benefit in particular from breaking free of many of the European directives and regulations from the EU Commission. So this would be a bonfire of red tape which would free up enterprise and creative incentives in Britain. Clearly, they argue that leaving the European Union would mean we'd have to spend less on our annual contribution. They also argue that leaving the CAP could lead to lower food prices because there would be less money being spent on expensive farm subsidies. Their general argument is that Europe will always be a major trade partner with the UK. Europe needs us as much as we need them. So there would be unlikely to be a major barrier to trade put up by the likes of France and Germany and Italy if we were to leave. And more generally, they believe that Britain is better off being an autonomous, independent, open economy with its own fiscal policy, with its own monetary policy headed by a central bank, and freedom to operate their own employment laws, for example. So this argument for Brexit is essentially about breaking free of a single market and becoming, if you like, an independent economic entity. Just recently, one of the senior business figures in the construction industry, the head of JCB, a guy called Bamford, came out in favour of Brexit, and this made the headlines. It came out in May of this year. I've just enlarged the quote there from Bamford. We are the 5th or 6th largest economy in the world. I think we're going to be 7th actually next year, but we'll leave that. We could exist on our own peacefully and sensibly. So that was the head of JCB, a very successful British company in global terms, saying actually we are better off out. Keep in mind he's a very strong supporter of the Conservative Party, and in particular the Eurosceptics on the right-hand side of that party. What about the arguments for voting yes to staying inside the EU, which is likely to be the referendum question? Again, there's three main groups of arguments here, and I'm trying to keep things as evenly balanced as I can. One of the arguments is about investment, that if Britain was to leave, quite a few overseas companies, multinationals, might think again about further investment. We've already had the heads of businesses such as Nissan and Deutsche Bank and Airbus all saying actually that quite a few capital investment projects are being planned assuming Britain stays inside the EU, and they could be put at risk perhaps. If we adopt a Norwegian approach, if we leave the EU but have access to the single market, we pay a price for that of course, then we would have to adopt many of the single market legislations and rules and regulations, but without any say in how those policies are drafted and formalised. Another argument for staying in is we don't want to lose the trade creation effects of being inside a customs union. So although the EU has common external tariffs around the area, Britain has free trade with the other 27 member nations. We don't want to lose that. And actually you can go further and say that Europe is in the vanguard of trying to build pan-European trade agreements with America, South Korea, with emerging African countries, and Britain can benefit from being part of those negotiations. It's also argued, for example, that Britain could be more exposed to lower cost competition if we broke free of the customs union, in particular from countries in Far East Asia, where labour costs are much lower. More generally, the arguments are that if we left the EU, we could create our own laws and regulations, but there's a cost again to businesses of having to adjust to a completely new set of laws. Many businesses actually quite like having pan-European standards, be it for car bag safety, airbags in cars, be it for vehicle emissions. It's quite good if you're operating in many countries to have common rules and regulations and industry standards. Once you become adjusted to them, it's not a problem. And there's an argument which they're saying that if we leave the EU and then start to close our borders, then we will accentuate the labour shortages that many businesses already face. Those are some of the arguments for Britain adopting the status quo position, possibly trying to reform the EU from within, but essentially agreeing to stay inside. And whilst we had the head of JCB saying that we should leave, here we have the CEO of Airbus, one of the big aerospace companies, saying, no, actually, we don't want to leave. We will be less competitive if we're outside the single market. The economic case for continued membership of a trade bloc with 500 million people and over 21 million companies of different sizes remains overwhelming. Very briefly, just to finish with, here are 4 of the options that are very useful when it comes to evaluation of this kind of question. It's often said, for example, should Britain do a Norway, which I take to mean coming top of the Human Development Index or winning the Eurovision Song Contest. But actually, in economic terms, it means that Britain would leave the EU, become a member of the European Economic Area, which gives it access, tariff-free access to the single market, but it means we don't have to follow European policies on farming and fishing. Is Britain similar to Norway, or is it really a different case? Norway obviously is a special economy in many ways. The Swiss model would be the kind of independence option. Britain leaves the European Union, doesn't join any major economic trading area, but seeks to build new trade relationships piece by piece, tile by tile, on an industry by industry basis. A longer fuse policy, that one, but with obviously more freedom to make trade decisions. The Turkish model is interesting. Turkey wants to join the EU. It's been blocked and probably won't join for another 10 years. But for example, if we adopted the Turkish model, we would enter into a customs union with the European Union for manufactured goods only. So we get free market access for tradable merchandise, manufactured goods, but probably not for financial services and things. We would basically act as a kind of satellite of the EU. 4th approach is to do none of these things. It's just to become an independent country and basically rely on our influence and our ability to come to agreements within the World Trade Organization, which of course has found it very difficult over the last 10, 15 years to reach any kind of multilateral trade deal with emerging countries and developed countries as well. So quite a few options. Just want to recommend an article for you. BBC News back a couple of weeks back, 22nd of May, a really terrific piece about the arguments for and against the UK staying in or leaving the European Union. It really is a tremendous piece, and I strongly recommend that to you. Okay, so to finish, what kind of evaluation arguments would I argue? The supporters of the European Union say that if we left, 3 million jobs are at risk. And I'm pretty much sure that if that comes up in the exam, if this topic appears on the paper, many, many students will make this point. If we left the EU, 3 million jobs are at risk. That actually is a pretty poor argument to use. And the reason is the number of jobs that are actually related to trade with other European member nations is not the same as saying that 3 million jobs are dependent on EU membership. If we left the EU, we would still trade with Europe. We may trade a little less, but our trade would not be fundamentally altered. On the other hand, opponents of EU membership say that this is the big opportunity to deregulate the UK, to rid ourselves of European regulations and laws, and to unleash a kind of enterprise agenda, kind of UK smaller state, massive private sector growth outside the EU. Again, I just don't buy that argument. The truth is that the majority of laws passed by the European Parliament and the British Parliament would stay exactly the same. And actually, when it comes to things like health and safety laws, when it comes to labour markets and environmental interventions, Britain's gone further than many EU countries. It's tried to be a lead figure in this regard. I don't think you would see the bonfire of laws that many on the right would hope for. My final 2 points are very brief. Firstly, regardless of whether we stay inside the European Union or not, it is in our long-term interests for the single market to work, and particularly if we bring new countries in. And as a kind of wider normative and holistic point, that competitiveness is just much more than being a member of the EU. Yes, it's our biggest trade partner. Yes, it's the second biggest source of foreign direct investment. Nearly 50% of investment comes from other EU countries. But we live in a world where the centre of gravity is moving inexorably to the east. And Britain needs to become more competitive, more dynamic, and more sustainable, whether we're inside the EU or outside. So in that sense, we need a decision to be made either way, so that the competitiveness policy agenda can move forward. So this has been a revision presentation on aspects of the European Union and the UK economy. Thank you for listening in to this one. I hope you found it useful. Check out our website, of course, for lots and lots of new resources and links to all kinds of different things to help you through exams. But for now, thank you for joining me, and see you again sometime soon.